Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
It is the 26th. Yesterday was crazy, man. I have not looked at the chart yet this morning. I'm a little scared to look, but I think that we're probably going to be off the worst levels, yeah? Here first on the daily chart, I just want to point out that we're kind of flirting with the 50-day moving average, which isn't necessarily predictive, but is definitely something that we're going to want to keep an eye on, because once you get below that, people kind of get a little crazy. Okay, yeah. Whew. Wow. Very volatile overnight. So yesterday, after we left, I mean, that's where we left. It took a real dive later. And what happened? Oh, man, the 7-year Treasury auction. You see that little tail there, man? Holy crap. I have never seen anything like that. Like like a few days after Donald Trump was elected, I think it was after Trump was elected, Treasury yields really started to rise, and we moved like 1.5%, and that was like the whole day. And yesterday we moved about one spot 4%. But at one point we moved down a whole point from 133 to 132 instantly off of the auction results there. That is crazy. That is really crazy. Now we have been able to recover a little bit of that. I mean, that's the way that the liquidity goes, right? Huge, large meta order, short-term regime change. So we'll see where they go. We should keep in mind that we just had the rollover. It's the end of the month. There was auctions. We're not going to have as many auctions here after, next week. So, I don't know where it's necessarily going to go from here, but here's what I can say. The regime has changed. This is different. That move was like the Fed is going to step in and do something. They can't ignore that, right? And there's going to be a lot of knockoff effects, like programmatic systems could start kicking in and stuff. Let's look at the commodities complex. Oil down a little bit this morning. Gold struggling. So again, this interesting dynamic with gold. The market is reading the rising yields as good. Because, well, I wouldn't necessarily say good, but they're reading the rising yields as, hey, the economy is going to be strong, and thus we don't need gold and silver. But if it's because of inflation, then gold and silver are a great buy here, right? At some point, it's going to flip back up. But for now, gold and silver continue to struggle. Silver kind of coming back towards kind of support areas. Copper also not doing as well yesterday. It didn't get slammed nearly as hard as some things, but it was pretty bad. How come it did not roll over my 5-year? Let's do that. Yep. Roll over. There we go. So now back into, our trade today. It's Friday. We get a bunch of numbers coming in here. Personal income, core PCE. I bet you that personal income's going to be up. I bet you. Because it's been going. So how are you guys? What's up, Seth? Wow, Bitcoin went right down to 44 overnight. I thought it was really weird yesterday how everybody on Bitcoin was like, oh, everything's great, and we're back up to 52 or whatever it was. And I was like, that's like just a minor, I don't know. Today, if they decide to sell this today, that could be really nasty, right? Oh yes, and the robots are on. Let's change the date. Also, what date? What should we do it? So last night on TikTok, I made fun of myself, and we got like tons and tons of views. And I have enough followers over on TikTok now to do lives. So I think on Sunday we'll do a live. Yeah, but I'm trying to think what time we should do it. Is there any to blow my nose? Hopefully it rockets up again. It was due for a good correction. I don't want to pretend like I know what's going to happen. So the way I do it is I say, here's the risk. And then when it happens, I kind of just say, I told you so, as if I said that it was actually going to happen. It's not what I actually, I don't actually know what's going to happen, right? All I can do is identify risks that are maybe underpriced by the market. In Bitcoin right now, I think that what we learned about Tether yesterday, or earlier in the week, I guess, is just, I don't know why anybody would want to be in that market after that. And especially, this whole thing about companies are going to buy. No way. Are you kidding me? Can you imagine? You're the CEO of a company. All right, guys. It's the board meeting, right? Okay, guys, we're going to buy Bitcoin, and this thing is extremely volatile. There's a good chance that we could lose 80% of our investment, and apparently the entire price of the past 4 years is based completely on fraud. What do you guys say, board? Should we buy this thing? I just don't see it. I just don't see it. And so Bitcoin below, I'd say 40K. Below 40K could get super ugly. Wait, what? Tether news? Wait, didn't we already talk about this? Well, so Tether settled with the New York Attorney General, and the New York Attorney General's conclusion was that Tether was not backed all the time. That there were periods of times when they were saying they were backed, that they didn't even have access to banking. And there was one day where Tether said, well, in good faith, we're going to put out the statement that shows that we have money. And it turns out that the money that they had had only been in that account since that morning, and it was a loan. So they didn't actually have that money. They had completely lied. They've been completely lying to us the whole time. So how much of it is backed right now, I guess we don't really know. But that alone makes me like, I don't know why you would want to be in that market, honestly. Heaven knows y'all gonna buy it anyways, though. And then you're gonna be like, haha, have fun being poor, Seth. That's what's... B&B and Cardano seem to do all right. I hear good things about Cardano. Oh, wait, so we should focus here. Here comes the news. I'm looking for that personal income number. Estimated 9.5. That's a high estimate. Okay, personal spending is slightly lower than expected. Income is higher than expected. The treasurers are buying there? Hold up. It sounds like an Atari game, yeah. So that sounds So we haven't heard it a whole lot, although I've had it on all week. But that sound is when price has been skipped. Wait for me, I'm still eating. Sorry, Vlad. Do you see work? Oh man, I mean, I wasn't watching it, but I definitely saw the charts on all the news sites. Like, well, it wasn't yesterday. It was like 2 days ago, wasn't it? You know what was even more interesting though was Beyond Meat. Oh man. So earnings comes out and it's just an absolute dumpster fire and the thing just absolutely crashes. And then they're like, "Oh, but we have all of these agreements now with McDonald's and these other restaurants," and then they just took off. That's one of the biggest head fakes I think I've ever seen. We're just getting a lot. One of the patterns, so we say like most technical analysis, it's not predictive. I don't want to say that it's useless, but this whole thing that like, pattern happens and 60% chance of something happening is just, I haven't found a technical signal with that high of a probability. Okay. But it's not random. And there are definitely things about markets that we can look at behavior that we can say is different from what it would be if it was just a random walk or, Gaussian noise or whatever the deal is. And one of them is that of clustering effects, especially clustering of volume and clustering of volatility. And you definitely see that in this market right now. It's not as big as like the last cluster of volume, but is doing it, right? Okay, so I can see liquidity getting a little bit better here. They're taking about 1600 to trade through, but unclear where we're going. The E-mini is taking off. The dollar hasn't really moved. Okay. Does look like, oh, you know what? I probably didn't fix my workspace correctly. That's okay. Do you think that tech stocks are going to continue to sell off today? I think that there's a very high risk of it, yes. This is my new word that I realize this, like, I shouldn't say yes I think or not. I should say there's a strong risk, because that's the way that the hedge fund managers on television do it, isn't it? Yesterday were quite good drops. Yes, yesterday's equity index. Well, the Treasury like totally shocked me, dude. When I was sitting there after the auction, because I was just kind of sitting there doing my work, and I looked over and it went like that, and I was just like, I've never seen anything like it. I was in complete shock. It was insane. The whole point, just like that. Never seen that. But here's the thing is, it's very often that when you see something crazy like that like, that's the worst of it, right? But at the same time, it also looks to me like the field is set, like Joe Biden is going to do what Joe Biden is going to do. Congress is going to do what Congress is going to do. Fund managers are going to do what fund managers are going to do. Like the field is set. The things that are going to happen, you can already predict, because people are going to follow through on what they said they're going to do, or what they have to do based off of what their fund strategy is and everything else, right? So it just kind of becomes a question of like, how bad does it end up being? So that's why I was like, that move yesterday, that is like, J Powell, you better do something now. Like that's what the mod market was saying yesterday. Is it really that bad? I guess we'll have to see. I guess we'll just have to see. Facing delay problems with NinjaTrader, you think I should get an AMD or Intel for better download speeds? Oh, that's interesting. So, yeah, it definitely seems like the thing that will slow you down the most is downloading the data. And unfortunately, I think that there's nothing you can do to change that because they send it to you at a certain speed, and that's just like, that's all that you can do. Like when I'm back testing. Well, so that one didn't work out. I'm kind of playing here in the Treasury, kind of like, we'll take a few, test the waters. So I'm trying to sort out how the numbers that came out there are viewed as extremely bullish. It maybe the treasuries are just kind of pulling back because this is where they were kind of earlier in the evening. The other thing that will really slow you down is the tick replay, which is a different issue because I believe that tick replay can only win on a single thread. And so depending on what you're backtesting, it may be better to go to an Intel or an AMD. Although the latest AMD processors are so good at that compared to last generations that I think you're good. Well, the inside liquidity is still pretty light. I guess one thing I should say, it's Friday, right? So kind of have to wonder how, I don't know. We do have some more number. We get consumer confidence at 10 too, so. So there's a lot of liquidity right there at 27. You mean he's slipping up again? Come over here, check a few things. Okay. Oh, that's interesting. I'm hoping that today will be a better test for robots, and I kind of changed a couple of things so that they're less likely to encounter this little bug that we've got. Okay. Well, it's definitely slowed down now, huh? You think don't short them? Well, I'm kind of wondering what's seems to me like they kind of just want to chop around in this area, and we were towards the bottom of that area, so look at that. That's why is there no liquidity sitting there at 28.5? trying out an adapted. What does that mean? I don't know if those DeMark. That's one that we could investigate is the DeMark. See, because there's not a lot of data on that one, because you're not allowed to like put out an indicator on it. They like sue everybody. But I could go and I could write it and do the stats on it, and we could just keep it to ourselves. Morning. Okay, so E-mini is flirting with a little turn here. Progressives to Biden make Harris overrule the Senate parliamentarian on minimum wage hike. Oh man. Okay, so have you guys been following this? The Democrats want to include a minimum wage hike in their stimulus bill, but they can't because there's like this whole thing with the budget where it's like you can use reconciliation on the budget, but you can't use it for other things. And the parliamentarian is saying, based on the rule, you can't include it in there. So the Democrats are saying, overrule her and just do it anyways. So then it would be, we're going to just break the rules when we want to. That would be so toxic for discourse in the Senate if it just turns into, Democrats can go and pass anything that they want through reconciliation. That would just be like, yeah, no. Such a bad idea. But who knows? I wouldn't put it past her doing it. So, cumulative delta, I just want to note that, like, the short end of the curve here is getting a lot more sell volume than the other sides. Gotta finish off the working class, right? You know what? Somebody pointed out something the other day to me that I had not. I was kind of disappointed. I was like, why didn't I? That's the sort of nuanced analysis that I'm supposed to be going for, and I didn't even think about that at all. Okay. You increase the minimum wage, then nobody qualifies for any of the government benefits anymore, like food stamps and all that. If you have a minimum wage job, you don't qualify for any government welfare anymore. I was like, wow. So the lower class, the people that are really trying to like raise a family on a minimum wage, they're basically getting a pay cut. That's weird. YouTube seems to have restarted your live since I'm just seeing the same thing. Like, oh, really? I don't know. When you're watching YouTube, just I don't know everybody knows this, but if I come over here to YouTube and I pull it over here and I come to my live stream, hey, it's a pretty good delay on there, right? Anyways, you see this little button here that's like live, and you can click that to go. So like if I rewind. Okay, then when I come and I click the live button, it will go back to the latest thing. Because sometimes you can get desynced and stuff, so pushing that button helps. Thinking about this again, and I'm like, I know why. Because when we turn back down, sometimes we do it so quickly. Like that. Watched though, probably. I mean, under normal circumstances, they would sit and chop around in this area for like a really long time and be frustrating and like, why won't it do anything? But lately, the liquidity is so light, they just go right through it. Oh, yeah. You switch your chat over to all chat instead of top chat. We don't have enough people participating to make the top chat thing worth it. It's funny, all our employees understand why they voted against raising the minimum wage. It's middle management Democrats who it'll have no effect on that vote for it across the board. Yeah, is Bookmap worth it? Well, I haven't used Bookmap myself, but it does look like a pretty solid piece of software. I care more about the DOM, and that's why I prefer Jigsaw. I think that Jigsaw is a better piece of software. But Bookmap's not a bad one. What about Tradovate? Tradovate looks like a good, especially when they came out, they were like a really good deal. Now I'm kind of like, it's just kind of okay. Like you can get similar deal elsewhere. I don't think that the software platform that you get with them is that great, but it's fine. Yeah, there you go. It's fine. I would say it's fine. We've got a good number of members that use Tradovate, and none of them complain about it. Right, so. You say Jigsaw has performance limitations. I'm not sure what you mean by that. So I guess one thing that I would say is that Jigsaw is doing a lot of calculations. Yeah, when the market's going really fast, it can tax your CPU. But there's a lot of settings, so you can make it update as fast or as not fast as you want it to. So I have it update not as fast. I could move it down so that it's like 7 milliseconds equal to my monitor's refresh rate, but I'll read that one out for Win.
Winston's mom says everyone watching now, please take a quick second to hit the like button if you haven't yet. This helps speculators with channel numbers. Thanks.
Yeah, they're just moving around on no volume. So I'm trading this on Sim. If you're new, I'm trading this on Sim today, and this kind of a market looks to me like the kind of a market that would be really nasty, potentially nasty to your account, Because look, they're ticking up 2 or 3 ticks at a time, hardly any volume. Now, on the split side of that, tactically for me, that means that I want to try doing a little bit more market making kind of a thing. Keller says, "Oh, I know." It really for them to still be ticking up and down on less than 100 contracts here in the Treasuries is really like, even a rallying bull market is dangerous to my account. Yeah. Sometimes over in the E-mini, we just start like on fire, and it's like you can't lose, and then all of a sudden it's like no matter what you do, you lose, and I can't figure out what causes the difference. You're saying that Jigsaw is good? I don't have any problem. I mean, let me put it this way: if you're experiencing slowdowns, it's not Jigsaw, it's your machine. I mean, I've had problems with pretty much every piece of software to some extent or another, but it's almost always me. I always think that everybody comes in, they're like, oh, the software should never fail on me. And it's like, well, yeah, but the user can fail on the software. That happens all the time. But Jigsaw makes more sense though. I don't know. Like that's adult user preference, really. Some people really like the bookmap thing. Oops, wrong one. I want the chart. Where's the chart? There we go. Some people really like the bookmap thing. I don't know. Like the Vista chart here. Their bookmap chart is better than the Vista chart. You can see where the big liquidity is a lot more easily. But the DOM is just not as good. and when I start to, so let me put it this way. A lot of order flow traders really pay attention to the icebergs and where there's a lot of volume trading. And I believe that you'd actually probably have you probably do better if you can find the places where the liquidity is not going to be there, right? It's being able to predict prices where the liquidity is not going to be there that really makes you money in the long run, because that's when you take a trade and then it moves up 4 ticks on like only 100 contracts at a time, and then all of those people that were stuck the wrong way on that have to puke, and that's what leads to good moves, in my opinion. Oh, there's ace short 38.40. Really? That is the opposite of the trade that I thought you would take. Can somebody move the CB, please? Oh, Glenn Greenwald. You know what? Glenn Greenwald is one of those guys that was a total lefty, and I always kind of thought that he was a little naive or something about Democrats. But that is a guy that holds to his principles, and it has been really interesting, and I think I've learned a lot from watching that guy. And here is a case where even though it was against his political preference, he held to his principles on freedom of information and so forth, and I really respect that guy now. They had fake 1,000 lots? Are you talking about the E-mini? Greenwald, and Tabby is another one. Yeah, you're totally right. Well, here's the thing about Tabby. Tabby is a good journalist. He really is. I always disliked him because he wrote that article about Goldman Sachs about the vampire squids, where he basically accused Goldman Sachs of creating every financial crisis in the history of ever. And I really don't like that article because, it has some good history about past financial crises and the role that company played in those crises. But you got to realize that if you're in the financial industry, you're involved. Like, the reason that those things happen is because all of the banks are doing the same thing, and the regulations kind of force them into doing it, So, like, to act like it's some moral failing on the part of some employees of a company or something. I just felt was incredibly unfair, you know? Oh my gosh, the cord like shifted and I got hearing back in the right ear. I hope that new cord comes today. They speak truth to power no matter what letter is next to its name. It's true. Now we get to see who looks the other way on Joe Biden attacking Syria. You know, like Donald Trump had plenty of opportunities to do that sort of a thing, and he never got involved in Syria. And here Joe Biden does it like at the drop of a hat. What's Jim Cramer saying? Haters and lovers coming to me in 60 seconds. Oh no. As someone who's not principally a full-on conservative, I like principled liberals who haven't bought into this establishment narrative, just defending Democrats for Democrats' sake. I know, right? Oh, there you go. You Winston, you found that article really quickly. Oh, I forgot that it was published in Rolling Stone magazine. Oh, man. Patrick Rooney, Bitcoin has been smashed. Gold futures have been melting. Is it time for the US dollar to shine? I really think at some point that gold is going to pull it out, but probably not. Probably they're just going to frustrate me. What was I going to say? Them here, Syria and migrant facilities are not something that I endorse under any administration. Well, so here's the thing. I think on the immigrant thing, Jesse. Here's the thing that you should be getting from that is that there are some things that may not be what we want, but are the only practical response. If we were to not like have these overflow facilities. They're calling them overflow facilities. I like that. That's if only Donald Trump had come up with that language before, instead of it being like detention facilities or things like that. Okay, if they didn't have these overflow facilities and they didn't have procedures, that they deal with when people are claiming asylum or coming over the border, the alternative reality would be so much worse, And so I think that the takeaway from that one should be that the media didn't treat Donald Trump fairly when they were talking about the border crisis. And I'm concerned that what's going to happen now is that Joe Biden's policies are going to lead to just all-out chaos on the border. But how much did I make yesterday? Well, so I think that when you look at so I'm trading these on Sim today. And because the market's getting wild. So this was the thing that I was worrying about. Remember earlier I was like, well, you could trade it live now. I was like, it's still not like the right market. And this that's happening right now was the thing that I was kind of worried about. So, but then on my stocks, I think I lost like 100, 200 or something like that. It was an ugly day. Even the Goldman was down. As long as we can have civil discussions, it's all good. I'm trying to, so I kind of had an epiphany this morning because I made a TikTok. And the TikTok was basically somebody was showing you a way to copy and paste text that I wasn't aware of, where you can just press Alt and the up and down arrows and it will move the code block for you. Oh, so useful, especially for me when I just want to reverse a particular signal and see what the inverse of that signal does, And that took off. That got 200,000 likes or something. And 1,000 subscribers from it and all that stuff. And I realized, I was like, yeah, Seth, you're trying to be too serious. Because the thing you've got that people like is being wholesome and a little self-deprecating instead of acting like you're the smartest person ever. So like when we talk about politics, it's kind of hard for me to talk about politics and not act like I know everything and oh, they didn't treat Donald Trump fair. There's airfare, there's the country fair, and there's even state fair, Brett. There's no such thing as life's fair. It's weird to hear you say you're on TikTok too. I know, right? But I love the platform. I have to say, it's a fun platform. There are no non-public exchanges for futures, right? Are you asking like, are there dark pools? So here's the thing, like especially on the E-mini, right? What you're looking at are derivatives. Okay. It's a little different like metals and oil, but like for treasuries and equity indexes in particular, these are derivatives. So yeah, could there be a really big trade going on out there that we don't know about? Absolutely. This is where I'm kind of saying like a more useful piece of information is to know a location where liquidity is going to pull. If you can point out that spot or that situation ahead of time where the liquidity is just not going to hold, they're going to cancel their orders and it's going to tick through on very little volume. That is way more useful than knowing that a big trade happened in a certain location. Alternate reality. It's going to be doing shuffled. Probably not. I'm thinking like, what should I do today? Oh my gosh. Got 200,000 likes and all these new viewers. And the algorithm, it's waiting for me to make another funny skit that it can send out to everybody. And I'm going to blow it. I'm going to blow it. I'm going to post something. I'm going to be it's not going to be funny or interesting. And everyone's going to be like, I don't care about bonds. It's going to... But no, were they fair to him? No, but it's just like there is a definite media bias on this stuff. Oh, well. There's no question that without the Black-Scholes model, we wouldn't be sitting here. What is the Black-Scholes model? Okay, so there was these two guys that were really, really smart, and they were math PhDs. They worked for Goldman Sachs, and they went and did a bunch of calculus and using information about what the traders were using to determine what the price of options were. They were able to develop a model to conclusively show why options are priced the way that they are. And they were able to show how you use the price of the underlying instrument and volatility and all of this other stuff. I couldn't sit down and derive it for you here because it's calculus and it's a little complicated, but basically Black-Scholes became the de facto standard for managing risk across the entire industry. So when you go to, your Thinkorswim, and it gives you like implied volatility and if the price moves to here, this is what you should expect the price of the option to be. That's all from the Black-Scholes model. And yeah, they published a paper at it, but apparently they developed it at Goldman Sachs. It's an interesting, so I gotta say, when you see those studies that come out, especially one like that, you should really pay attention to it. Because basically what the authors are saying is that we could make money off of this ourselves, but what we found is so important to the market that we think that everybody would benefit from it being public knowledge. So, and that's the case with Black-Scholes. That's the case with, the Kyle model is another big one that I would look into for scalping. What is liquidity? So when we talk about liquidity, we're talking about limit orders, essentially. So how many limit orders are being placed at any one price, right? There are 2,000 limit orders at 132.28.5. And that is the resting liquidity at this moment. We can also talk about the latent liquidity, which means that once you get up to that price and they trade through the resting liquidity, how much more liquidity shows up. Once you start to model the latent liquidity, you start to uncover some of the interesting properties that lead to the fundamental movement to markets that people tend to notice. We'll lean into studying them all. Yeah, if you can understand Black-Scholes, that helps a lot, especially if you can trade options. I say for me, the thing I'm most into right now is the Kyle model. I should do some reading about the Kyle model. I should go and read his original paper instead of just the book talking about his original paper. Forex Live tweets, bond market retracement improves the market mood. Yes, it certainly has. Although, still pretty nasty in the E-mini. But I wouldn't be surprised if we saw a good recovery today. You say if the market runs to 38.98, well, it's a little further, too far away for me to think about at the moment. I wish I had taken another contract here. That's okay. Oh, okay. Oh, we have the whole thing about the Treasuries. Yeah, so by the way, we are on June here, right? We're on M. I'm trading M, and the liquidity is still really light. Yes, I guess we still got like roll stuff going on. Might be better for me to read a chart and know how to click instead of dumping trucking piles of info. Well, so here's what I would say. If there's something that will help you for scalping, it's reading about the Kyle model. Or really, once you read the Kyle model, there are so many things that retail traders say about the markets that you start to realize don't really make sense. Like people will say that the market is coming after my order in particular. Well, it's not that. It's that every order has an impact on the market. And if you're not using an actual probable signal, then the chances are that the execution impact of any trade is ultimately going to lead to a loss. You have to have some sort of signal to make up for it. The Kyle model, Kyle, was written in 1985. Well, they came back up there really quickly, didn't they? So now that they're back up there, I'm like, should I add risk? I found and linked the PDF on the Kaya model. Huh. Wait, I didn't see that. Wait, is it this right here? Yeah. Yeah, the theory of future markets. Oh, how come it's not, Oh, here, I can click on it over here. Cool. Oh, it doesn't, that link doesn't seem to work. Let's see here. Okay, so now they're a little higher. This volume examines a wide range of issues which arise in the theory of futures markets. An introductory chapter analyzes the simple equilibrium model of a futures market and focuses on the role of the market in spreading risk. Other chapters examine issues such as conditions under which trading in futures markets leads to a fully efficient reallocation of risk, the role of different assumptions about expectations formation on the nature of equilibrium, the effect of trading futures on price volatility in the spot market, the provision of liquidity, and the role of transaction costs, the extent to which futures prices reveal traders' private information, determinants of hedging and speculative trading decisions, factors influencing the likelihood of manipulation of the market, i.e. a corner or a squeeze, the importance of program trading and dynamic hedging strategies on price volatility in equities markets. The breadth and timelines in this book will ensure it becomes a standard reference for academics and professionals working in financial markets. Oh, I should probably read that. It's only $24 too. Oh, okay. Why did you use the term when you said liquidity is when? No. I said that the more useful thing is if you can know when and where the liquidity is going to pull, right? So if I know, as an example, if I know that there are people that want to buy through here and there are people that want to sell through here, but that there's this particular spot or area at which if they trade at 24.5, all of a sudden the buyers aren't really going to want it and they're going to cancel their orders, pushing it down through to like 23 area, then you have a trade, right? Then you have a trade. Whereas knowing that 4,000 contracts traded at the high there last time on an iceberg order, well, at the time that happened, I mean, it held it, but at the time that it happened, you don't know, is there going to be more market buyers that are going to push it through there, or is the iceberg going to hold? It can be really hard to make that determination sometimes. And you can't determine it statistically. I've done a lot of tests to try and see, okay, when you get an iceberg of a certain size, is it more or less likely to hold? And your probabilities on that one just aren't, it's just not very consistent, right? Whereas I've done other studies where I found things that I can use to identify when that liquidity is going to pull. And when I backtest those, I get pretty good results. Oh, you know what that reminds me, by the way? This one right here, Gabby, works on ES, but not MES. I backtested that yesterday. And it needs to be on ES. But time and space are, what are you talking about? Okay, so they come back down there pretty easily, right? So do you see, like, there is so going back, there's this area between here or so where they don't really hold the liquidity through, right? So you can kind of just put orders on the edges of that, and you would have caught it 3 or 4 times now. Just every time that it gets onto the edges, I'm too chicken to do it. I'm pretty happy. I'm like, well, I got a good buffer. I kind of just want to hold this. I guess if I did it, I could. See, it's not going to fill me. Yeah, I was going to say I could put the order there, and then let it come back up and take it again in that way. Because I'm not sure that I want to be short 2 contracts up in here. That's the problem. Look at that, only 49 contracts to get through there. The math in 3 pages into the link. Yeah, so here's something is, I think that a lot of retail traders don't get into the empirical research because you start seeing the math and you're like, I just don't understand what's going on in there. What you should do is just keep reading. You read and don't worry if you don't completely understand all of the math, because what happens is that they're usually trying to walk through how they derive a certain equation, and you don't really need to know. And eventually at the end, they'll go through what the actual implications of it are. And once you've read the whole thing, then you can go back and look at the equation. You can kind of be like, oh, okay, I understand why they get what they do. So just push through. You push through, you read multiple times, and that's how you learn that stuff. I'm trying to figure out how much of this low liquidity in the 10-year is just the roll. So it's just really light. It's just really light. So if I come back to ZN and I look at March, oops, I think I picked the wrong one. It's about the same. So even if you combine the 2 of them together, the liquidity on the inside is just really light. 12 minutes to the bubble burst. Is this your full-time job? No. Wouldn't recommend this as your full-time job. So now I have to go into this diatribe. It's just, I'm sure that there are people out there that make tons of money doing this, like CTAs. You just find a trend and then you just manage that trend and they make tons of money. But that's not me. Scalping is really, really hard. You're competing against robots. The chances of you being successful at it are extremely low. If you are successful at it, the rewards aren't really all that great. Would only do it if you really enjoy it. And I would always have another form of income. So a lot of the guys that we know here that do really well with this, the reason that they were able to do it was because their wife makes a lot of money, So I have a day job. I only do this for 3 hours and then I go to my day job. Do you think Biden's foreign and blue state rescue plan gets approved today? Well, I'm wondering what's going to happen. I'm still wondering what's going to happen with the minimum wage thing. What else do I do? I am a site reliability engineer for a healthcare company. A healthcare exchange, rather. I know a guy that does that, and literally his wife works for Toll Brothers and is the I know, right? But don't acknowledge it. We're just move on. Okay, so there's some liquidity there at 27. 4,000 contracts. 2,000 contracts on the downside. Okay. And then 26 half balls. All right, well. Let's just, let's put that down there just in case. We can always cancel it if we need to. Kramer on CNBC says Moderna might have a vaccine against cancer. What? Wait, what? A vaccine against cancer? Oh, my stepson is going to be devastated because he wanted to cure cancer. A vaccine against cancer? What? You would think at some point the YouTube, well, the thing is that like all they can do is like ban his IP. And especially if it's a dynamic IP, they wouldn't be able to do it without like banning everybody that uses his service provider. So there's not a lot they can do to prevent spam accounts, other than like requiring verification on like you could limit it to say you can only post in chat if your YouTube account is verified with a phone number. But then you guys would all have to verify with a phone number. The same problem with Discord. It's really annoying, right? But that's why I keep saying, like, if we just, as soon as we notice him, we get rid of him and then ignore him otherwise, then as far as we're concerned, it's like he doesn't exist. Right? This is the quote from Kramer. People I know who are working with this company know that they may have a vaccine against cancer, a vaccine against certain forms of cancer. I have it from more than one source. We're talking about a Nobel Prize. It works. What? Well, if that's true, y'all better go buy Moderna, right? And that's what he's saying. I'm not saying you should go buy Moderna, but I'm tempted now. It would fit with my portfolio. Are we there yet? Asks Clark in Equity Indexes. 5 more minutes. Okay, I'm going to take that off because there's an iceberg there. Oh man, the volume went. I wish I knew where it was. Where's the short? So annoying. Should come in the mail today. New cord. What could have gotten it? Oh well. Morning. The John Smith. Okay, that's an interesting name. It's funny because every time that somebody comes in and says, I am immediately something like suspicious. A new name. Where did I take it off? Was it 24 or was it 24 half? It was 24 half. I had the original at 24, so I guess I should have left that on, but it's all well. I'm kind of looking at the E-mini open here, and I'm like, well, I don't know if let's kind of let it do its thing. Took me 4 minutes to make 50 counts and give you 50 likes. Okay, but you realize that helps the channel, right? Keep doing it. Thank you very much. Thank you very much. I appreciate it. 56 likes, 57 likes. That's great. What's Bitcoin update? Oh, I need to post another update. I'm still really concerned about if Bitcoin takes a little plunge. I tell you what, if they do it, it might not be until later in the day. This might be like one of those late afternoon moves sort of things. So I probably won't post on the Patreon until later today, and we'll see what happens. There is an inverse head and shoulder on the Bitcoin chart. Well, unfortunately, my own research shows that those patterns aren't very predictive. Okay, so they went through me a little bit. The liquidity is still a little bit more fickle than I expect, but they did bounce back through, so... Yeah. I mean, the issue with Bitcoin, the thing that's funny about Bitcoin is that when things are going well, the technical indicators seem to work really well. So that's why you get a really wide number of people in the Bitcoin space that really strongly believe in technical analysis. But then the problem is that when they fail on you is when Bitcoin, drops 80% or whatever. Especially with these things, like everybody says, like, this is what percentage you win last time, or last time there was this many legs to the move, so there, and we're only this many legs to the that stuff doesn't matter. Doesn't matter. On the split side, something that does matter is that, in my opinion, that matters is that Bitcoin below 4,000 basically means that MSTR is screwed. Volatility hits and the indicator fails. Oh, see there, now it's back. It has something to do with the cord twisting somewhere around here. Oh well. Yeah, I said there was one of these things like, future traders is saying a friendly reminder to traders that this is a game about mindset and knowing ourselves, pay attention to your emotions and learn to manage actions despite them. Yeah, but the issue is that you need to have a good setup too. Okay, so the initial move in the E-mini is a pretty good excursion on the short side. There wasn't necessarily a ton of volume on that one, though. So for us, missed it. I want to see an excursion on the other side here. Let's see if they can pull it off. Nope. Ouch. Okay. Rabobank says we're about to lose all price discovery and never go back again without a systemic crash. Ooh, that's a little ominous. There it is. Good. It's a little profit taking right there. It looks like treasuries are kind of capping the upside here, though, still. I got treasuries are pushing down pretty aggressively, in fact. Nope. Nope. There's definitely spots, but they're going through them first. Can you tell us what a beginner could use as simple techniques and setup to spy a good trade? No. Sorry. The way this works is I can tell you things about the market, but I'm not going to share setups. So what your question should be, okay, what is this thing about the market? Like, why does liquidity do this or that? Or what is the tendency for liquidity in this situation? Okay, well, they've kind of head faked on us twice here. So, really difficult trading here, right? That one, no? Okay. A little better. Treasuries kind of pulled back there a little bit, helps. Okay. Okay, well, cumulative delta-wise, this move up has not canceled out the down move. They sure made significant progress there, didn't they? And there definitely was some absorption and buying down up in here, so. Please bump SPY. Or you think it's going to dump, huh? I don't know. I'm still not 100% sure what it's going to do. In fact, I'm kind of sitting here wondering, why are you trying to let one run? Because you think it's going to come back to the open? So it looked like there was a hole there, but it's actually, there's quite a bit of volume in that area. So they just pushed through some significant selling there. It doesn't look like the sellers are necessarily going to give it up right away, but yeah, like that. So I'm not sure if the liquidity is still there, but it does seem like they're struggling to get to market orders for some reason. They're very much distributing in that area. Okay. It's a little better. Are we in for a wild ride today? Well, I'd say that there is certainly much more of a battle right now than you would normally see on a Friday. They're fighting over the open now. There's been the volume is, I mean, look at that both ways. So if this buy meta order works through and gets above the open, I really think you could see this whole thing unwind. But that's like a big if, right? Mm-hmm. Well, back into that profile area again, huh? Didn't manage that as well as I wanted to, but the selling here, it looks pretty. Yeah. Chicago. Oh, do we have Chicago PMI today? Oh, no, it's going to happen right now, guys. The Chicago PMI is released early. Well, that was close. Hmm. So we got about 10 minutes here. Sorry, 10 seconds. So it's lower than forecast. But that's a little odd. Man, it's going to take it now. That sucks. This, I'm starting to think that this is just a little bit too whippy for what I'm trying to do. Yeah, good grief. Stop me out of that. Okay, that's a little more like it. It's kind of like, why were they buying ahead of it if the number was bad? But then here there was like a sell-off on the number and then it goes up, huh? Okay. Well, there's a lot of contracts short that are going to have to bail if they're going to keep going like this. That was an incredibly unusual sequence of events, but I guess I was nimble. Yeah, it's like squeezing out both sides. This doesn't look to me like, yeah, you know what's going on here is it's just trading. I don't think that the big institutions are actually making big moves here. It just looks like day traders shoving each other out of positions. Oh, did I? No, that's not right. Okay. Look at that. What is going on here, man? I kind of screwed up there too. I thought I was only going to have one contract on. I had two. So that right there does not look particularly great to me at the moment. Okay, that's a little better. You can see they're just kind of hanging out towards the bottom end of that distribution now. Which kind of suggests to me that sellers have moved down the place that they're willing to sell at. We need to get out of this. I'm really mad about that last trade because it was really good and I screwed it up. Jeez. Now they're not going to give you a chance on the way back, are they? And look, the Treasury yields are careening down. Do you think that hedging is a good technique in uncertain situations? Well, so like if you have a large equities position and you're really concerned about it, and you can come in and sell some micro futures, to cancel them out. Yeah, that can be a good strategy. It's not really something that I'm very familiar with, though. If we were just going to chop around, well, I don't know, man. That downturn there was pretty extreme. So we do got consumer sentiment coming up at the top of the hour, so like in 7 minutes. But from my reading of the volume, it just continues to be a sell. And it looks to me like the buyers had almost every opportunity that they could have possibly have had to, really pull something out. So it's so volatile, and volatility tends to lead to downside action, right? I want to learn as much as I can. Well, go and read about the Kyle model. Learn how to program. Okay. I'm feeling a little better about that. There you go. Take a one off there. Still got some time until the Michigan numbers. You think a digital dollar is on its way? Yeah, probably. Sounds like that they're going to start engaging the public on it in the next year or late 2021. I forget what they said something yesterday about when they were going to start talking to people about it. And what about the debts? Well, no. Well, what happens. listen, if you want to learn, here's the thing is, you want to learn how to research. You want to learn what is the process that I go through to make up a theory about the way that the market behaves, and then test that particular theory and, determine how effective that method is. Because the reality is that all of the good stuff isn't going to be out there where you can just read it on the internet. We've been trained that we want to know something, we can just go and find it on the internet. It's not like that with trading. So you've got to learn to be the researcher. That's why reading books and papers published in a scholarly, with all of the math and everything, that's why I say you go and you read those, because then you get insight into how those people think and how they go through and do stuff. Okay. So there's some aggressive buying there. Still not to the Michigan numbers. It is a key pivot area there that they're defending, so So for the Michigan inflation expectations final for February, we're expecting a reading of 3.3. That's the number we're going to be paying attention to here, because if that reading comes out to be higher than expected, then the Treasuries are really going to take us for a ride, right? Well, they're already kind of taking us for a ride. So 132.16 was kind of the middle of that ugly down move we saw yesterday. Oh, they're just pushing it. As everybody pulls, they're just selling into it. Okay, the conditions is in line. Give me that inflation number. It sounds like all of the numbers are like in line. I don't know. Well, the E-mini is pushing lower. They kind of look like they maybe want to push to 3,800. Oh, no, there's my stop right. Okay. Right there. Right there. Come on. Good. Okay. So they're kind of orders trickling down into the sell, but it's like, oh, okay, there you go. So the Treasury is pulling back a bit, but well, there's some pretty strong buying coming in through there, but this is kind of looking like a dumpster fire, right? Like that move was not good. So we could see some temporary pullbacks maybe. But I probably don't want to go long, right? You could sell into it maybe. Not when it's doing that, but that right there. No thanks. No thanks. Can you please guide what kind of scholarly papers you read or suggest? Okay, so like the Kyle model from 1985. I forget the name of the paper. Wynn already linked it, didn't she? Or what about what are these guys' names? Almgren and Chris. Almgren Chris. I find it for you. Read this paper. This is the big one. This one isn't as applicable to day trading, but this is the big one. This is like all of the big boys use this now. Like you trading VWAP or TWAP to time your transactions, you're behind the curve. This Almgren Chris has been out since like what? When was that? 1992? Let's see here. 1999. So 20 years now. You're 20 years behind the curve. You're using VWAP or TWAP to time your transactions. Inflation would be good for co-profits. No, someone yesterday said market is going to have a huge up move. I don't know. So the thing is that we got like this parts of the economy that, from my view, are extremely overvalued, right? So, you know, the people like Tesla. And so I think that the market doesn't, there could be a correction for sure, like a 10 to 20% correction. But I think overall, like the market has to come back and reprice with higher interest rates, essentially, which means that there's not going to be as much money allocated to these growth tech companies, and there's going to be more money allocated to things that do well when interest rates are rising, like banks. Like banks are like criminally underowned, especially with how well Goldman Sachs has been doing lately. And I wouldn't be surprised if in the next market regime that everybody is on Wall Street Bets is talking about which bank to own, like they talk about the tech companies, So that's kind of where it goes if it's an environment where interest rates are rising again. Okay, so they got the little bit of an up move and it's already kind of coming back. So I'm wondering, do I want to go short here right now? I'm not so sure. There is some aggressive pushing there. But when I look at this, I'm kind of it kind of looks like they're teasing it, like to buy it here again, and then it'll maybe come up higher, and then maybe later they come back if it really does turn into like a real dumpster down day. Now let's see here. Fernando asked that being at the end of the month, statistically speaking, can we see weird movements due to fundamentals like account? Yes, you absolutely can. So one of the things that you'll notice in bonds, for instance, bonds tend to buy at the end of the month because they expect that people are going to they're going to buy, and so they acquire all of their inventory at the beginning of the month. But when they don't buy, that's usually when you get some of the most aggressive down moves, like you've had this week. So there's always a Jekyll and Hyde property to it, right? There's always two sides to it, right? Okay, so this is a lot of volume they're absorbing at 38.14 in both of the E-minis and the micros. In fact, they did make a slightly lower low, but I feel like I'm being a little bit too overly cautious because I was able to make up my losses, but that action earlier wasn't necessarily great. The trading earlier, rather, I got some to run, but I didn't really take profits on them and stuff. So I'm being a little wary. Well, so if we do this, we got it back to 16. Yeah, so we can probably catch a couple of 16 tickers in here somewhere. Nope. Oh my gosh. Oh my gosh. It's ugly. Okay, hold on. Oh, really? Okay, so that was first one. Oh, okay. Hmm. I'm kind of feeling like I should try martingaling this, but look at this thing. So this is really volatile, isn't it? Is that the over? Well, let's see here. Yeah, the overnight low is 38.01. There's this last pivot low as we just breached. Use the tick if martingaling big tip. Yeah. Well. We should have been doing that like 30 minutes ago. Built up a good position, built some profit into it, and then just let it run. So I was doing a little bit of it there, but it was being like really, really small targets with it. That was some pretty excessive buying there. Oh dear, oh my. Okay, well, I guess we're doing it. Oof. Okay. Oof. Did Gabby take one there? You know what? Because she's probably using 50. Okay. I gotcha. Come on. One more over here. Oh, come on. 21. Really? Really? Okay. It's okay. We don't need that one to fill. There we go. I was like, where's the market orders? Where are the market orders in the Treasury? Okay. So we go for the overnight low now because they came back to that low awfully easily. Okay. I think we have a little bit more buying through here, yeah. But look at the Treasury. Whew. Okay, so around 16, they're kind of running into selling again. And the Treasury, oh man, this is like, I'm looking at like the range of possibilities, and I'm like, well, this probably just stops there, and you know. But then there's this other situation where like they're gonna go through 16 and all the way to the other side and just destroy yesterday's low, you know, like. It is an ugly market, man. Okay. Should have hit it right there at 13. Okay. Oh my, they're going to come all the way back here in the Treasury, huh? What is that? Didn't you cover loss and get some? I did. Everything over here is positive right now. But I haven't been doing it necessarily by like one, you know. I've been using multiple contracts to do it. So what I've been doing is I've been finding an area where I think that I can take on a lot of risk and just capture a little bit of the spread and then let one of them try and run on the sell side is what I've been doing. So like when it crossed that last time, took it. And this time they might cross it, so oh man, every time that the E-mini starts going up, then the Treasury ticks back down and it's like, on second thought. Like down 3 ticks. 3 ticks. You gonna take 19? They're pulling like these market makers will just let it slip through everything, man. This is brutal. Yeah, they took 19. Cool. Is gold being this? Oh, yeah, it is. Silver, too. Well, is strength coming into the dollar? What about Bitcoin? Bitcoin's still so here's the thing is like equity selling, treasury selling, gold selling, Bitcoin selling, the dollar up maybe half, maybe 50 cents. Where's all this money going? Where's all this money going? Yeah, I think that this is going to be a second standard deviation day. Like when we went, I came so kind of when I decided like, okay, I'm just going to start martingaling short is because I saw this and I saw 38.13 and I was like, well, they didn't really hold back at that spot at all. So what are the chances that they go for the second target at 37.80? And I'd say pretty high, especially since the treasuries aren't holding back. Like, look at this. Do you think any big? Well, there is a real risk of this thing turning into a 10 to 20% pullback move. There really is. I'm not going to say that that's probable or anything like that, but I think the situation has regressed to the point where that is a serious risk to consider. I don't even have the equities open today because I know that I know that Sumo Logic is just going to be getting destroyed, right? No, I don't see. Okay, so this is an interesting thing. Is it going to read it for me? This is the big question. So I shouldn't say it like I know for sure. I was just my opinion is, and my opinion is this: stocks are the market overall is acting like the treasuries see a red hot economy coming, and that is why they are raising rates, and so they view that as good for stocks overall, but just bad for those tech stocks like the Nasdaq. But then they also view that as bad for gold, because if the economy is going to be doing well, you don't need the gold, right? But that is, in my opinion, that is not what is happening. So when you look at the moves down, like the biggest move down was off of the auction, and we've been having bad auctions lately. I believe that the reason that the market is really struggling here is because there is simply too much supply. Government is putting too much money out there. Too much debt. The government is taking on too much debt, and the treasury market can't absorb it. So if that is the case, and I believe that there's a good amount of evidence in the timing of the market moves to support that theory, then that's not really bad for gold at all, is it? And what I would expect to see happen is eventually the market would start to get really concerned about inflation, and you'd see gold pick up. Okay, so we just got two slips there in the E-mini, one up and then right back down. So the volatility continues. A lot of absorption there at 38.08 area, though. Where the QE schedule and the rate cycle, those levers are very much at play with the changing expectation for the growth out. Yeah, I mean, the Federal Reserve is going to have to increase the amount of quantitative easing they're doing, like, straight up. Otherwise, like I was saying, like, it's already in motion. I don't know how bad it's going to be. I don't know how it plays out, but I think that all of the information is out there and like the market is digesting it now. And it's just kind of like, how bad does it get? Like, how bad does it really get? Oh my gosh. Jeez. Okay. So there's 3,800. There was a lot of people buying that dip there and they just got destroyed, man. Okay. So we're 12 half. Okay, so 6 and then 132. Okay. Oh, God. I can't look. What is going on in the Treasury right now is just absolutely. I mean, I know it's good that I'm in it, but that is scary. That is like, oh, that's going down too fast. We gotta take a contract off there. Like this. This is just awful. And the target, remember the target is 37.80. Wow. Any chances will flip a breaker? It would have to be well below 37.80. I don't know at what point it starts doing that. The thing you got to remember is that, like, when we were having circuit breakers flipped on us last year, you know, like we were like 2,000 points lower. So okay, so that's a little bit of a recovery in ES. That recovery there was the liquidity vacuum, probably, because the delta wasn't increasing at all. A new low very easily. My gosh. $1,000. I think this could keep moving, but I'm getting to the point now where I can't watch both of these. So I have a pretty good idea of where I think the E-mini wants to go to, but not the Treasury. Yeah, Alligator says deleveraging. That's definitely what's going on here. It's kind of sad you think about it. Like, there was points a little bit after the open where it looked like, hey, maybe we'll have an up day, right? Okay, so they got me. Good job. Jeez. Yeah, it's still too volatile here. This particular up candle is a lot stronger than the others, though. So I think we just finally came back to a 10-minute simple moving average. Oh, the Treasury's still going. Oh, okay. So there's a big order just showed up at 13. That's pretty ballsy to put a big order like that at 13. Market hates that number. Market hates that number. Yeah, the initial breakers, I don't think, isn't it a 7% drop? I think it's a 7% drop. But like the thing that you got to consider is that even with today, it's like, oh man, how do I do this? Close that. Even with this big of a drop as we've had today, it's still, I like it. We're not even close to as big as the range as we had yesterday, for instance. So yeah, I'm at 7%. But how do I change? I gotta change it here in trading view. Show bar change values. Okay, so for the day, we are only to negative 0.6%. So we're not even to a full 1% decline. You're like you realize that to have a circuit breaker hit, it would have to be like 10 times worse than it's already been. That would be a huge move. that would take us down to like 3,400, I think. So not anywhere close to that. But it just kind of shows you when we were having those, how crazy the market really was. But the thing is there was just zero liquidity at those times, right? But so I'm not worried about circuit breakers, but what I'm thinking is that the Federal Reserve is going to have to do something. What is it? More QE, yield curve control? What are they going to do? Because, I mean, I don't know if they're going to do anything today, like right now, but you know, this can't go on for much longer before the Fed says, like, this is a problem, guys. Because this is, especially over here in the 10-year, there's some real panic going on over there, man. And they're back up to that 100 area. Or, well, sorry, 3,800. How my robots doing, by the way? Let's see here. Gabby's getting screwed over hardcore. Is she taking 3 or 4? How many is she taking? She's a 1 for 3. Wonder why she's doing bad, though. I just had a thought about a change I could make to her. Let's see. Okay, so they've built a little bit of a base and they're moving up, but the price is still incredibly crazy. Whew. Okay, so they're moving up, and what do I see? Selling in the 10-year again. Think about all those I don't know if any of those levels matter, dude. Like, oh, volatility stop right there. I mean, that may just be like a straight up reversal. That kind of stuff kind of suggests not, though. Oh, wait, what? Mm-hmm. 27% of all household income in the United States now comes from the government. Oh my gosh. Yeah, and realize that the way the circuit breakers work for the futures market is different from the equities market, right? The equities markets, they have circuit breakers that adjust, so it's like a certain percentage move within a 5-minute time period. So it's a lot harder to figure out where it will halt at. We could make an indicator that it could do it, I guess, but you have to be on your platform. Since I'm on Fidelity and I have programming on that platform, I guess. Well, I don't know. It's holding these levels pretty well. Okay, so some volume there. Treasuries have been backing off here. Yeah, they changed it in October. You're right. Wasn't very long ago, was it, Steven? Well, it's funny. Jay is the only robot doing well right now. The other robots look pretty awful. Gabby being the worst, actually. No, Joseph being the worst. Well, Joseph is a long only one. That guy should probably be turned off today. There's a reason that he's on a separate account, because that's the one that's like all technicals. That's the MACD one. Thanks for that 30-point pop, Powell. Wait, what? Did somebody say something? I didn't really. Why did they blame it? Powell hadn't done nothing. Well, we're still within my plans tolerance, but I didn't think that I would have to take on that much risk for it. So now I'm kind of like wondering, in this scenario, if we're going to martingale it, how much risk should we really give ourselves? So I do think that we probably come back at least to 3,800. Oh, hey, I didn't have a long down there, just didn't get filled. Okay. They are kind of slowing down quite a bit here. Yeah, well, I spoke too soon. Oh, look at the treasuries are coming back. How about we say 1,000? Their halts are meant to protect us, but they really protect big guys if a fat finger moves. Well, I really do feel like it's a band-aid, like for sure. Like the real issue is all of the liquidity disappears because it's all robots, and robots just say, "Oh, I don't know what's going on, and I just see a lot of buy side liquidity, so I'm just gonna pull it." That's what happens. So I don't know, like this is acting like, we're going to recover the whole thing, but I'm not so sure if in this particular case, that's what's really going to happen. It's a pretty good run that we had there, though. Okay. Okay, so we're coming back into the area that we just like swept through. From 26 to 22 or so. There's a lot of 22, sorry. 25 was where we spent quite a bit of time before like we really dropped, right? Mm-hmm. Okay. A little bit more bearish there. Stay profitable, thanks, I think. Lewis. do as I say, not as I do. On my crazy sim account. As I say would be, if you got one up at the top, then great. Otherwise, don't touch it. Like what we caught in the Treasury, that was a great trade. Both of them. Stay profitable by not trading live. Yeah, sure. Unless you're like really know that the market's condition. Well, let me rephrase. You shouldn't trade it unless you think that the market conditions are favorable to you. And I still don't think that they are to me. So it's kind of like, you don't have to trade every day. I don't think that as a retail trader, you even have to trade like every month. Because there's kind of this sweet spot where there's volatility, but like a good trend, but you don't want volatility like this. That just destroys you. That's like volatility because nobody knows what's going on, right? You love these sorts of markets. Well, I mean, it's fun. It's just like, I don't know. I've destroyed accounts on markets like this. Really have. Like there's this point where like I tend to do well with volatility, but there's a certain point at which it's like no stop that you put is gonna hold, Oof. Well, the market makers are definitely favoring the buyers now, right? Like they pulling out of the way so easily for that. So ECB is talking right now. That could be part of why we're recovering. U.S. removes stumbling block to the global deal on digital tax. First Quack says next 1 hour very crucial for the markets. Well, that was 30 minutes ago. Hindsighting much? Well, I don't know. Hindsighting on what, per se? I don't know. So, like, the thing is, if I could go back, on the E-mini, I know that my stop is probably going to get hit no matter what. So I really am kind of just gambling over here, if you understand, okay? I'm martingaling, essentially, is what I'm doing. But over here in the Treasury was different. Over here in the Treasury, I thought I had a pretty good read on it, so I took a couple of contracts and then just let it run. And that one worked out really well, and I even got an okay exit on it. And I guess if I wasn't so focused on my E-mini trade right now, I could be doing something again in the Treasury because of the way that it's fallen there, right? So it's not really hindsight. It's kind of like, I know what's going to happen. So like we'll play around for fun, but I'm not going to play capital at risk because I know it's not a favorable situation to me. You know, I should have put more capital to risk last summer because usually I don't trade the summer because the summer tends to do really, really poorly for me. And that was like one of my best periods of trading. It was like I couldn't lose. But that was probably had more to do with the market than anything else. I'm kind of wondering what's going on with Gabby here, why it's been so bad. I guess there are periods where we expect it not to do very well, but maybe I should go back and back test it with just a daily filter. I need to go back and back test her again and see the trades that it says that it made today, if they really match up. Because I've had that sometimes where I would look back at it and I kind of realized some things that would have made it unreliable in the back testing. Okay, it's a little bit lower bullish. It's still going to have to get through 21. Okay. Bet. Thought so. Well, that happened a little too fast. Mm-hmm. Oh, wait, what happened? How come? Market I must have had a stop order out there that I forgot about or something, because my break-even point should be like way higher up here. Well, that's okay. Man, these wicks. Kind of crazy, right? So that's a little concerning right there. 15. No, they're filling some liquidity. Maybe they're okay. I was kind of looking at it trade through that 15, and I was like, well, are they gonna slide all the way back to 12.5? Because that would definitely be negative, right? Let's do right here. Okay. Another one, huh? Oh, they go for him. That one was a little different, wasn't it? Much further excursion past him that time. How much is the delta? Well, okay. I'm looking here. Trying to figure out how dumb this actually is. definitely a buyer around that area, like, right? It's just. Oh, Yellen talking? They're still talking about the global tax thing. Okay. Well, are they gonna retreat? Are they gonna make it to the open? 38.45. I was thinking about sticking them on a ton more risk there, but now I'm looking at it like, But at that point, you kind of have to wonder, well, why are they selling? Then why are they buying? Like, it's crazy. It's crazy. Well, yeah, I know that this is. I don't know what. So I want to see it go down to the volatility target. So, like, at what point do you sit down and you say, nah, it's not going to happen? The reality is that I don't really have any kind of a signal on anything about the longer term thing here. Like, you look, all of my edges today, except for one, all of my programmed edges are doing poorly today, except for one. And that one has only made $30. Now, on some of those, it may just be that the, what do you say? The volatility is too much for the stops and that they're still good. I don't know. One of them actually is the Joseph actually did end up taking one and has made a good amount on it. I don't know. This recovery has been a little bit too quick too. Have you noticed? Like, normally it's like it'd be down at the bottom and it'd be reversing on us. And then after the London close is when it really takes off. But this one is already almost back to the RTH open. 38.40 has been a lot of volume. That was the bottom of the kind of the action before the open, really, right? Yeah, from 40 to 45. But really, this distribution right here. And look, the Treasury is not really, like, look, it's at 12.5 again. So I really think they're going to turn around. They're going to be like, oh, you're okay with that? Okay, we can increase them further then. Wait, what? Fuck. Okay. It's not letting me see. Look. Okay, that time it let me do it. I don't know what the hell it was doing there. Not quite. Come on. There we go. Okay. Do I want to make money? You're probably full of shit. And I don't want you to come in and show shit. These people. Come in. Oh, yeah. Let me guess. You use RSI. Oh, that was a move right there. No money and Mooney. Don't do stock tips either. Oh, who took the stop loss there? Was that Brandon? Yeah. I don't know which one it was. Robots are improving. Except for Joseph. He was up like $80 at one point, and he's not. He's losing it all. And Gabby is just dismal. I'm really wondering how she... Well, there are days where it would get to 1,000, so I guess it's not like super counter to the stats that we got, but I mean, come on. Tell you what, the action in the Treasury right now is some of the most random I've ever seen. Good. Oh man, I really left that many behind. Okay. What is your broker? I'm using Jigsaw Day Trader as a software. I'm using AMP futures right now. I wouldn't necessarily endorse AMP, but oof. Okay. Some fighting here now. Not sure what's going on here. ES and other indices have recovered, but gold and silver, no. Well, gold and silver is probably technical selling. Like, that's probably stop losses and that sort of a thing. So the dollar's really not moving here, is it? Like, really, when you look at it, you kind of have to wonder, like, where is the money going? So it doesn't look like it's actually going anywhere yet. Well, okay. Gold, yeah. I mean, if you're a CTA in gold, right? You're taking real brutal losses. But here again, I believe that the selling in gold started with a theory that is wrong. That the interest rates reflect a growing confidence in the economy. I don't think that that's the case. I think everybody knew that there's going to be a recovery and that there's going to be strong growth here. There's a question about how much inflation is going to be associated with that growth. But that's also not why the treasuries are moving. The treasuries are moving because there's too much supply. So the treasuries are moving because there's too much supply. Why should that affect gold? Well, it doesn't. But the historical correlation is that the higher yields are, the worse it is for gold. So, ergo, gold sells. Going to the dollar. Well, I mean, normally when in a downturn like that, you would see at least one thing as up as the flight to safety asset, right? For sure. But it's not happening this time. I really should have been doing what I'm doing here back at 40, but yeah, chase for yields happening without taking equity risk. I mean, I suppose if the case is that interest rates rise just a little bit, just because we say that they need to, but the Federal Reserve still keeps their interest rates low for forever, and the economy does well, and there's no inflation, then I guess maybe the thing in gold can make sense. Or, I mean, that's what gold is saying. That's what the people selling in gold right now seem to believe. And, you know, because it goes down, it kind of becomes self-reinforcing, right? Now, oil's faring okay still. Silver's kind of Silver is coming back down to a place that makes me unhappy, but that's okay. Fine, I'll take it there. Okay, well, so it was like I said, it was like you can make it work out. I'm not necessarily saying that you'd be able to do it with your account, but you can make it work out, right? And how do I do that? Kyle model. I mean, I'm not being that specific about it, but I'm using the general principles in the Kyle model to go and make it break even, and then you get a little bit and you take it off and you let the rest of it run. If you have a big account and you're willing to take on a lot of risk, you can do that and you'll get away with it most of the time. But I wouldn't recommend doing it. But it's kind of fun, and you do learn things from doing it. You do learn a thing or two from doing it. That's what I did yesterday, martingale. I was silly though. You know, it's kind of funny, Vlad, the term martingale, because we use the term martingale because of the gambling strategy. But the gambling strategy was called a martingale because of a statistical thing. So it was really like this whole area of mathematics was invented originally because this guy wanted to make money in financial markets, but it didn't quite work out, but it was useful. 10 MES lots total for negative 1,000 unrealized and broke even and could have been in my favor, but I didn't stay over 48. Yeah. But you can see here the issue is like at one point we were pushing like what, $300, $400 worth of risk for this to really pay off for the amount of risk that we put on, especially with me only having one contract on now, and I did that because I only have 10 minutes left. You know, we would really have to careen down, right? But anyways, the way that a martingale actually, like the original definition of it, and I have to apologize because I don't understand this very well, okay? It means that the expectancy of the future price is the average of all past prices combined. Or more simply, the best expected price for the future is the current price. And basically, when you take the average of everything, it'll always come out to be that. So if that's what's going on, then what you can do is you can just take contracts at like literally every price. And if you're allowed to add an infinite number of contracts, you can always come out and bring it positive. If you're allowed to take an infinite number of contracts. But that's not what I do, is because then what I also do is I take into account the flow. So like when we were moving up really strongly, I was like, okay, back off, let it come up. I'm going to wait until the flow is more favorable, and then I'm going to start absorbing contracts there. Right? Well, I don't know, man. So below 38.15 or so, like it gets ugly, right? They kind of loud until they face GameStop run to 500. Yeah, for sure. I mean, that's the way that the market makers do it, for sure. But there is another component to it, right? Which is that No, geez, hold on a second. Do I want to take it right there? All right, fine. Okay. Oh, yeah. So if you're going to do that, you're taking on excessive risk, then the risk management becomes really, really important. And because you do face the real possibility that a one-day loss can wipe out your account, right? So this is where like the easiest way of doing this, and something that in almost all of my back tests improves things at least a little bit, is to have a daily loss limit, to where they get back to a certain level. Or, you know, if you lose $1,000, then you stop trading for that day. And I always thought, well, yeah, but then like sometimes it turns it around, and so doesn't it make sense? But and I don't know why this occurs, but every time that I back tested it, you set that limit, and that helps. I guess probably the reason is because, like we said earlier, markets cluster, right? So if you get a period where your in whatever your setup is doesn't work very well, you're likely to keep getting it over and over and over again that day. And so the sooner you can figure out that that's what's happening and you can stop, the better. Do you consider yourself a quant? I'm going to say no. I'm going to say no. So when I think about quants, that tends to be a lot more portfolio theory. Do you know what I mean? Like most of those people that are doing quant strategies are really saying like, okay, when this happens, I buy these kinds of stocks, and when this happens, I buy these kinds of stocks, and they backtest it, and they find that they can beat the market doing this certain kind of thing, right? That's what I think of when I think quants. The thing is it's not a very well-defined term, unfortunately, right? But what I do and what I'm interested in is market microstructure. So I think that the best, the best explanations for what I am is I'm a news speculator and I'm a market maker. But when we're talking about all this complicated stuff like what we were just doing there, it's market microstructure. Like I'm applying what I've learned from the Kyle model to determine when I can safely add contracts, essentially, to eventually try and break even. Does quant trading pose an accident? Where is that? That looks like a crappy website. That's okay. I'll forgive you for posting it. Then I imagine if I'm losing, there must be a bigger player that's in the same boat. Oh, look, is it Gap taking it long there, huh? But she's gonna lose again. No, maybe they take it. Maybe it goes long. Oh, so you asked, would you favor Intel or AMD for faster internet speed? So, while I don't know if your CPU is really going to matter much to your internet speed, that doesn't make much sense. I definitely favor AMD CPUs right now. That the AMD product is simply better. And especially for trading, you get a lot of opportunities for trading for multi-core performance. And so ultimately, I think that you're usually going to get better performance if you're using an AMD processor with multiple cores. But there are definitely also specific applications where it's going to be better for the Intel. Like if you're using Thinkorswim, that's single core. Or if you're doing tick replay, that's a single core. When you say I am a market maker, what does that mean? That you have money to start or something? No, it means that when your market making strategy to me is you are placing orders on the limits, and you're placing so many of them that you make money off of the spread. So when I say you make money off of the spread, most people think, oh, okay, I'm going to put an order at 38.21 and get filled, and then I'm going to take it off at 38.25 and take, well, as soon as you start doing that, you realize that, you take it at 22 and then it goes way further than that. And, what do you do? Well, so that's where I'm saying that if you put one buy at every price and you put one sell at every price, okay, on average, because of the martingale, because prices are martingales, you will break even. And the amount that you will make on average comes out to be 1 tick per contract. Ooh, we should test that. It's 9:30 here, so we don't have much time left. So on that trade, we did 61 fills. Wait, how is it 61? It should be 62, probably. Okay. Although some of them are probably screwed, so let's say 50. Okay, so we had 25 contracts, so we had 228.75 divided by 50 means that we made $4.57.5. Okay, so I actually did better than 1 tick. I actually got about 4, a little bit less than 4, right? Got 3. I guess you could say I got 3 ticks per contract on average, right? Well, things are moving pretty fast, so. Have you ever looked into and backtested the Kelly criterion? Yeah, so man, I can't even remember what that is. I've looked at it so many times and then didn't really find a whole lot of use to it. Kelly criterion. Dun, 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 dun. Oh, right. It has to do with the sizing. I can look at it again. I think that the issue with those sorts of things, they're really, really useful, of course, but how to apply it into a retail trading strategy, I'm not sure. But a lot of these things, like I look at a retail strategy and then, let it game out and isn't today that H contracts expire? No. So today, let's see here. Today is like last call for Treasuries. It's I believe. So it means that if you don't roll over today, then come Monday, you could potentially be called and have to give somebody $100,000, $1 million worth of Treasuries, right? So they have to roll. I think that a lot of them have rolled. Is that why the liquidity is the way it is? I don't know. Look, the Treasury is going to push down again. Do equities really think they can hold this? I don't know. Well, I really martingaled it in today. Yeah, this was taking 2 contracts. I think that what I should have done is right here. This one I lost $20 on. This one I lost $20 on. Why did I start increasing it here at this point? Was that when I was selling? That was at 38.38. That's still higher than we are now. And it was a sell and I lost money on that one? Wow. Well, I understand why I was so frustrated. I've been sitting here thinking, well, I've just been selling it. But actually, the reality is that I just caught some sells that I really let run. This initial, you know what else? This second one that I did, I did not manage that well. So like I was trying to let it run and I had like $150 made on it. And like, that was good. I should have taken it off. And then it came back. And then I was like, well, let's start martingaling because I think it's going to go down. And I mean, it worked out, but whew, it was bad. Bad. But here I'm trying to make like a longer term determination on something that, you know, I just can't do. We just don't have anything probable to tell us that's what's going to happen, other than just kind of guessing based on why they're selling. What is your robot based off of? Which one? I don't know. So they're all based off of a bunch of different things, but the most recent one that I made that I'm a little disappointed in today, and we'll have to see if that is so the thing is I'm testing this and I don't know if it just happened to have a bad day or if the back test is that different from live. If it is really that different from live, maybe it's a good thing because maybe I could flip this around, but and it'll do well. But that one is based on looking for areas of low liquidity. So, tell you what, guys, it's time for me to get going. So, yeah, I don't know what time I'm going to do it, but follow me on TikTok. I will do a live on Sunday, right? We can talk about the week ahead. I've always wanted to do like a Sunday thing. So let's do that on TikTok. And what else? No, I don't know if I'll have a video this week or not. Probably I should. I know what I want to do. So see you guys otherwise Monday. And in the meantime, stay profitable, friends.